What is going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. Today we're going to go over the S&P 500 ETF, or SPY, as we do every week. We're going to talk about what happened in the previous week and what we can expect for the upcoming week on the overall markets and on the index itself. So first things first, let's go ahead and address Friday's move. You can see that Friday resulted in a strong selling candle. This was the full day candle. We reached a high of around 452 at one point, but closed near the 440 mark, which was not expected by many, considering markets appeared to be on their way back up into recovery. However, the fact that we never made it back above the 50-day moving average was already a sign that we were still looking weak overall. After facing a double top here right around that 458 mark, we got pushed all the way back down to 440 and had a low of about 439 on Friday. So our big trading range here is going to be between 439 and 452, so you can mark that as your large trading range going into this week. So your main focus going into this week is going to be this range that we've highlighted here. Anything above the 452 mark would put us back in a potential bullish trend that can carry us into a level above 460 and above that 50-day moving average. If we break below Friday's lows, which were around 439, we can easily move to retest that 420 mark in which we bottomed out at when the correction decided to bounce. So we've experienced this 10% or 12% correction from the highs of 480 down to 420. After bouncing at 420, that became a significant support. And considering Friday's lows were 439, that makes our support going into the week 439, but anything below it can decline to that 420 mark. Not a straightaway shot unless there is a very significant catalyst that can push us down, but it can happen gradually through the week. So keep an eye on this trading range when you go into this week. Keep in mind that if tomorrow closed at a low of 445, your trading range becomes at a low of 445, so that becomes your support to focus on. Now, what happened last week to push us down to this level again? Because we seem to be going back up. People were a little bit more optimistic. First, we have the inflation report. So inflation report came out on Thursday, and it was at a 40-year high. We were expected to decline a little bit, but we came in at 7.5% inflation rather than 7.2% inflation, which was not a good sign. You can see that we opened at a low of 451, reached a high of 458, and then came down to close significantly lower. So both Thursday and Friday's selling candles were significantly strong, so it's something to take note of when you are going into this week. And then what else happened last week? Friday, we got the news that Russia plans to invade Ukraine a lot faster than expected. Over the weekend, some of those remarks have developed, and we've gotten word from Putin, which we don't know if it can be trusted or not, that he doesn't plan to invade Ukraine next week. So you can see that there's a lot of uncertainty. There's a lot of mixed news in the air that's driving markets nuts and causing all this volatility. But just keep in mind, with volatility always comes opportunity, and whenever there is an announcement of anything, there's opportunity in other sectors in the market. For example, let me go ahead and show you some of these stocks that reacted to the apparent news of Russia's plan to invade Ukraine sooner than expected. You can see that we got a large increase in Raytheon Technology Corporation. We also have companies like Lockheed Martin Corporation, which also rallied on that news. We also can look at the energy market. So if we look at XLE, or let's look at a specific oil stock, for example, you can see that CVX rallied. So Chevron rallied after the news of Russia's plan to invade. So whenever you're looking at the market and you hear any kind of news, there's always some kind of sector that benefits while other sectors go down. Excuse me, don't mind my cat. While other sectors go down. So you have to be very careful and not having the mentality of, well, it's all going to be a failure from now on, or it's all going down from now on. You can study the markets and see what could benefit in a time of uncertainty or in a time of war. So anytime there's war, especially with a country like Russia, that affects our energy, that affects oil and natural gas, because oil is such a large distributor from Russia. when Russia goes into war and barrel output is at stake, then we can see oil increase naturally. So that's why oil is projected to hit 120 a barrel in the coming months upon the invasion of Ukraine. And that's why oil has been on the rise since the beginning of the year. You can see that starting January all the way till now, oil companies have been rallying because of this news. Other sectors that may benefit from this are going to be security companies, so cybersecurity companies that are also getting a strong upside move because as we have learned in our world and we've developed, we have become more of a cybersecurity threatened society rather than just a war threatened society. So our cybersecurity needs to be top notch. America is spending millions and billions on dollars in order to keep our cybersecurity in full protective mode. And this is obviously going to benefit from time of uncertainty, especially in times of war. So these are just examples of a few companies that can benefit. So we've already covered energy, we've covered defensive stocks like Boeing, RTX, Lockheed Martin Corp, and plenty of other companies that you can look into. So defensive stocks, energy and oil, and cybersecurity. And then last but not least, and this is more geared towards the interest rates. So the Feds are expected to raise interest rates this coming week. So one of the biggest events that is happening this week is the emergency Feds meeting that's supposed to take place tomorrow. So because inflation came in at a hotter number than expected, and the market is reacting with a ton of uncertainty, the Fed have decided, instead of having a meeting in March, which they will also continue to have, they called a emergency meeting to take place tomorrow. And so tomorrow's meeting is a huge catalyst of what could happen to the market next. If the Fed come in and say that they're going to raise interest rates faster than expected, and if you don't know much about interest rates, briefly speaking, interest rates are at near zero right now because the Fed wanted to stimulate the economy and stimulate spending during the COVID crisis, but now it's time to raise interest rates again. Higher interest rates make it more expensive for companies and people to borrow money. Therefore, spending goes down and companies have a higher interest rate to pay on their loans, which impacts markets to the downside. So you see large cap tech take a hit from this if this was to be the case. So if the Fed come in and they take a hawkish approach tomorrow and then they raise interest rates faster than expected, then we can potentially expect markets to continue declining. Now, one thing about markets is they don't always react how you expect them to react. So make sure if you are day trading or swing trading that you don't just trade based off the news announcement, that you trade based off how the charts and investors react. So we've already been coming down. Maybe this has been a precursor reaction to what is expected. And when what happens that's expected happens, then we may push back up. So make sure you react to the charts and not strictly to the headlines. So that's going to be the biggest event going into tomorrow. The Fed's emergency meeting tomorrow, Valentine's Day, and then the updates on the Russia-Ukraine situation. So make sure you keep an eye on that. The best approach that we're taking right now is we're focusing on the sectors and industries that are seeing a benefit from the current world events. A lot of people are stuck trading companies based on what they experienced in 2021 or 2020. They're sticking to the same companies. People are still trading Tesla over and over again, expecting it to go up. But we're in a new year. We're in a new world. We're in new developments. We have new things to focus on. Oil, energy, financial stocks, defensive stocks, those are the name of the game right now, and especially going into this week and the next few weeks as we get more development from the Fed and from the Russia-Ukraine situation. But looking back at the S&P 500 or SPY, we've already covered the range that you have to focus on. Other than that, what I would keep an eye on is maybe QQQ, so keep an eye on the technology trust, which really can determine how the S&P 500 moves. So the S&P 500 and QQQ are both primarily technology indexes. I mean, S&P 500, most of its weight is held in technology. So watching the technology index, which is QQQ, is also going to be a benefit to your trading game. But other than that, you guys, I think that's going to be it. Our primary focus this week is going to be tomorrow. Cash is king going into tomorrow. However, after tomorrow's Fed's announcements, we will have plenty of opportunities to take advantage of, because then we can see where money is going to flow. Investors don't like holding cash. They like putting money in places that can make money. And there's always some kind of way to make money on the stock market, as long as you're patient enough to see where the capital is flowing after significant announcements are made. Thank you so much for checking in, and you have a great Super Bowl Sunday and a great Valentine's Day.